you all are fit and fine at your places. I'm Priyanka Vish from Ardent Progressive School. Today in this session, we'll be starting a very new topic, which is past adjustment or adjustments in the closed accounts. As in the previous sessions, we have discussed about the calculation of interest on drawings in different cases, and I hope those topics are clear to you. So here in this topic is quite relatable to the topic which we have studied in the previous class, rectification of errors. There we have studied that for any error, that means when the accountant makes mistakes while recording the transaction in the books of account, that is known as error. So that error can be rectified by passing the rectification entry. So there, for every error there was a different entry for rectification, but here when the partners are preparing the partnership accounts and after the closure of account, if the partner finds that there is some error or there is some transaction which the partners have not recorded, for the correction of that mistake or for rectification of that error, one single entry is passed which for rectification, and that entry is known as single adjustment entry. So it is clear here also there are some errors which are made by the accountant while recording the transactions relating to the partnership firm, and those errors can be rectified by passing a single adjustment entry. So we can conclude that sometimes certain errors and omissions occur while preparing partnership accounts. These errors and omissions are given in the question, and we have to rectify these errors and omission by passing single adjustment entry. So to rectify the error, different type of error, only one single adjustment entry is passed, that is known as past adjustment. So here for every error, whether there is one error, two error or three error, for every error only one single entry will be passed for its rectification. This is the difference between the rectification of error which we have studied in the previous class and the past adjustment which we will be studying in this class. So let's see what are the errors which are made by the accountant while preparing the books of accounts. So now we will be discussing about some examples of errors and omissions which the accountants do while recording the transactions relating to the partnership. First error can be omission of interest on capital. So this is the error when the partnership firm forgets to record the interest on capital which is to be paid to the partners. So this is the first error. Second error can be omission of interest on drawings. So in this type of error, the partnership firm forgets to record the interest on drawings which is to be collected by the partners. Next error can be omission of partners' salary and commission. So this is the error where the partnership firm forgets to record the salary paid to the partners and also commission paid to the partner. We can also call it as appropriation. This is the appropriation of profit which is to be paid to partners. So salary and commission are considered as appropriation. So we can call it as omission of partners' appropriation. Next error is interest on capital is allowed even if the partnership deed is silent. So here the error is interest on capital is allowed. We know when the partnership deed is not there, or in the absence of partnership deed, interest on capital is not allowed, which means in case the partnership deed is silenced, then the company or the partnership firm is not supposed to allow interest on capital. So this is also an error which will be rectified by single adjustment entry only. Next error can be interest on capital is allowed at the rate 10% per annum instead of 6% per annum. So here the error is the interest on capital which is to be paid by the firm to the partner, it should be at the rate 6%, but the firm has paid the interest at the rate 10%. That means more interest has been paid by the firm to the partner. So this is also an error. Next error can be interest on capital is allowed at the rate 5% per annum instead of 8% per annum. Now here also the firm has allowed interest on capital at 5% per annum instead of 8% per annum, which means the firm has to pay to the partner interest on capital at the rate 8% per annum, but the firm has paid only 5% per annum. So less amount of interest on capital is paid to the partner. So this is also a type of error. Next error can be interest on drawings charged at the rate 6% per annum instead of 8% per annum. So here the error is the accountant has recorded the interest on drawings at the rate 6% per annum, but actual interest on drawing were 8% per annum, which means the firm has charged less amount of interest from the partner instead of 8% per annum. Next error can be interest on drawings charged at the rate 10% per annum instead of 7% per annum. Now here also the firm has to collect the interest on drawings at the rate 7% per annum, but it has collected more amount of interest on drawings from the partners. So this error will also be rectified by passing a single adjustment entry. Next error can be profits distributed in wrong ratio. For suppose the profit is to be distributed among the partner equally and the firm has distributed the partner in the ratio 3:2:1. So this is the error when the partner has recorded wrong profit sharing ratio. Next error can be comprehensive error. Comprehensive error means mixture of two or more errors. So comprehensive error means when the partners make two or more errors at the same time, that is called comprehensive error, and these errors will be rectified by a single adjustment entries. So these were some types of errors which the accountant make while recording the transaction in the books of account. We will be solving the question based on each type of error, and we will learn how to pass one single adjustment entry for its rectification. Let's take an example of a numerical question here. Now here is a numerical question which is an example of understanding the concept, and this question is based on the first type of error, which is omission of interest on capital. Now the question is, X, Y and Z are partners sharing profits in the ratio 3:2:1. Their interest was rupees 6,000 each. Now firm omits to allow interest on capital. We have to pass adjustment entry to rectify this error. Now here, what is the error? Error is the partnership firm has forgot to record interest on capital which is to be paid to the partners. So to rectify this error, we will first make table showing adjustment. This will come under working notes. We will show this work as a working note here. Table showing adjustment. It can be rectified by this table. Partner is X, Y and Z. So in table of adjustment, 5 columns will be prepared. This will be of particulars. We can take it as particulars. Then partner X column, partner Y column, partner Z's column, and at last total. So here the error is that the partnership firm has not allowed interest on capital. We will note down this error first. What is the error? Error is interest on capital not allowed. So now interest on capital, we know interest on capital is an income for the partners, right? When we prepare partners capital account, we record this interest on capital on credit side. Why? Because partners capital account credit side contains all the income earned by the partner and debit side includes all the expenses paid by the partner. So this interest on capital which the firm has forgot to record it on in the books of account, this interest on capital is income for the partner. So we will write here credit. Now interest on capital to be paid to X is 6,000. Interest on capital paid to Y will be 6,000 and to Z will be 6,000. Each partner is entitled for interest on capital amounting to rupees 6,000 each. Now the total amount of interest on capital which the firm has to pay to the partner will be 6,000 plus 6,000 plus 6,000, which is 18,000. That means the firm has not recorded the amount 18,000. Now if this 18,000 is income for the partner, same amount will be expense for the firm. So we will divide this 18,000 in the ratio 3:2:1. Now if this is expense for the partnership firm, we will write here debit. Debit what? The amount 18,000 in the ratio 3:2:1. Now one more thing, when there is a credit amount, it will be recorded as it is. But when there is a debit amount, we will record it by putting a bracket. Bracket denotes that the amount is in negative value. So now we will divide this 18,000 in the ratio 3:2:1. That means in X column, the amount will be 9,000 as X ratio will be 3. In Y's column, the amount will be 6,000 as the ratio is 2. And in Z column, the amount will be 3,000 as Z is having a ratio 1. The total here will be 18,000 only. So now we can see positive value of X contains 6,000 and negative value contains 9,000. That means if we solve this, what will be the net effect of this? Net effect will be in negative value only. Here we will be seeing what is the net effect, or we can say what is the difference. difference in both the value, debit value and credit value. So 9,000, which is a negative value, it is greater than the positive value. So the answer will be in negative value only. The 9 minus 6 is 3,000. Now positive 6,000 minus negative 6,000. Here the net effect will be 0. And in Z's case, positive value is 6,000, negative value is 3,000. So here we have more of positive value. That means answer will also be in positive value. So this is the net effect where there is negative value for x. For every negative value we will write here debit, and for every positive value we write credit. So here in Z's case we will write credit. Now what does this mean? This means X account will be debited. X is liable to pay 3,000 to the firm and firm is liable to pay 3,000 to Z. So this will be the adjustment entry which we will be passing by adjustment table. So by this we can pass the adjustment entry where X account will be debited and Z's account will be credited. There will be no effect in Y's account because there is no amount due to Y and no amount is paid to Y. That means effect of Y is nullified, and we have to write the adjustment entries for X and Z. So we will be passing the journal entry or the adjustment entry in the books called journal. So format of journal is date, particulars, LF, debit amount and credit amount. Date, particulars, LF, which is ledger folio, debit amount and credit amount. Now, as we know, in the adjustment table, X account were debited. So we will write here X capital account debit and Z's capital account was credited in the adjustment table. So on credit side we will write to Z's capital account, and in both the cases amount was 3,000. So this is how we will pass a single adjustment entry for the error omission of interest on capital. Narration will be adjustment of omission of interest on capital. So by this we have learnt how to rectify the error. The first error we have discussed, omission of interest on capital, where the partnership firm forgets to record the interest on capital which is to be paid to the partners. So in such case, first we will be solving this question by preparing table showing adjustment, which will be shown as working notes. In adjustment table, we will see which partner is liable to pay what amount and how much amount is to be paid by the firm to the partners, and by that we can see which account is to be debited and which account is to be credited, and it is seen by the net effect or the difference. After knowing what account is to be debited and whose account is to be credited, we will record that transaction in the journal and we will pass a single adjustment entry for this error. This is how we will solve the numerical question based on different types of errors. So in this session, we have understood the concept with one numerical question as an example. In the next session, we'll be solving some more questions based on different types of errors. That's all for today. Thank you.